Hi, welcome to the Market Alert for Thursday, the 16th of January 2025. So, by all things, benign CPI and bullish bank EPS spark face-ripping short squeeze. So, both in the UK and in the US, the inflation numbers were down. There's the UK, inflation drops to 2.5 from 2.6. We know it's all smoke and mirrors, but it was used yesterday effectively to rally all markets to the upside, including the metals, which is unusual. And US stocks and bonds were underpinned after soft leaning US CPI. And the numbers were for the UK, you can see there a drop from, let me just refresh this because we haven't got the numbers there. Let me then go back a day. And there you'll see that we were forecast for the UK at 2.6 and we came out at 2.5. Utter nonsense, frankly. And CPI there for the US coming in at 0.3. This is month on month. Year on year also down, as you can see. Well, not down, coming in same as previous. And that's interesting, that is. I didn't look at that in much detail yesterday, so it came out higher. So forecast was 2.9, came out at 2.9. Previous was 2.7, and yet the market rallied on the basis of 0.01% drop in month on month, and the market goes up. There you go. I thought it was bigger than that. Some of the other things that I looked at, the way the headlines were, that's amazing. So it's not all it appears to be. So it'll be interesting to see what happens to the markets today as they take on board the fact that the CPI numbers came out more or less, they came out exactly the same as before. It can be seen on the chart there as well. Right, let's have a look at the market's reaction then, which, as the headline stated there, was a bit of a face-ripping move to the upside. So let's kick off with the Dow. So in the Dow, you can see the market up, but not up as much as it was the previous day either. And the Dow's nowhere near its all-time high, yet the Dax is, which we'll look at in just a moment. So there's the market reaction to the CPI numbers for yesterday. We just go from the low of this bar just up to the high of it, just to see what we had. And there's 488 points, 500 points there as prices were moved to the upside. This is why the market didn't do a lot after, but then managed into the close to move higher. I thought it was odd why I had a couple of losing trades yesterday afternoon in the DAX, and now I understand why. And why I missed looking at those numbers, I don't know, because I just looked at the headlines on Zero Hedge and it said it was down, so I assumed it would be. But that year-on-year number coming out at 2.9 is very interesting indeed. So let's see if the market can actually get above the 200 MA today. Not only that now, but all focus and attention is going to be on Trump inauguration for this coming Monday. So the German Dax puts in a new all-time high. Market down slightly there, so new all-time high is in place, and in fact there's a new one being made overnight at 2658 on the Trade Nation platform here. 30-minute charts, you can see there again the market putting on 150 points just on the news. So the DAX, despite Germany's economy falling out of bed, the disconnect between fundamentals and the reality is non-existent anymore. It's been like that since 2009 when QE started in earnest, and we can see this is reflected here today. Just ignore all of the news. All the bad news is good news, and the market is going to be making new all-time highs again in Germany. Incredible. Meanwhile, in the S&P 500, this moving higher than Tuesday during Wednesday's release of the CPI numbers. And you can see here from this high down to here, we're currently just below 78% retracement there. 30-minute chart, again, you can see the market's reaction to that month-on-month number. And in the FT100, inflation figures there, we've seen already that also dropping 0.1%, market moving higher. Needs to take out the 89 to move higher, found support at the 78% retracement there. And in the 30-minute chart, again, you can see up all day and then taking advantage of the US month-on-month 0.1 drop as well. So yesterday the dollar dropped but rallied, and it's now making its way back to the upside. This is probably in support of the peace deal, however long it lasts, as well in the Middle East with Israel and Hamas. So let's have a look at the metals for yesterday. So in silver, allowed to move up yesterday, trying to move up as well during the first part of the session. So let's just draw in some fibs to the upside. We took out 38 and 50, so 62, 78, 89 are the next upside targets if the silver market is allowed to move. You can see the market's reaction there to the CPI numbers yesterday takes the pressure off what was the narrative the day before, where they couldn't see any chance of any short-term reduction in interest rates, to now bringing that back on the table just with a 0.1% drop in the month-on-month CPI numbers. Market needs to take out yesterday's high if it is to move higher. However, if we look at gold, this is already starting to move lower overnight, shown by the daily chart. And in the 30-minute chart, you can see the drop off there already, finding a bit of support there, though, at the 50 EMA. So let's have a look at the gold-silver ratio. Gold-silver ratio dropping because, as we've just seen, silver moving higher overnight and gold isn't. So market moving down. Watch this level here. If you do look at the gold-silver ratio, that's going to be around, let me just grab this, it's going to be 87.31ish. If that's broken, that'll be great, and if not, it could find support and see silver move lower, gold move a lot less lower, and prices move back to the upside. Right, let's have a look at the trades for yesterday. So in yesterday's trading session, the market opened, traded sideways, then had a shakeout down to the 200 MA, which you can see there when prices were brought back. And then we moved to the upside, heading towards the high of the previous day. I didn't stay in until that point, which was disappointing really, because obviously the market never stopped moving higher. I could have moved the stop to break even and just hung in there. And then there was a bit of a pullback below the high, but it didn't take long for the market to reverse and move back up and continue to move up towards the R2 and just through this. So a really good session there in the morning, which is unusual. Then we get to the CPI numbers. The market then sees another 150 points being put on there. And then that was it. And now if you look at the price action, the market is sideways to lower. And then, of course, the reality kicks in that the 2.9 is the same as 2.9 on the previous release, which is no change. It's just a month-on-month that dropped 0.1%. And now I understand why the market actually just traded in a sideways range. And the first loss comes when we get this potential short that's filled. In just a second, that one wasn't filled. Then we get this one, which filled, and that closes out the long, and then the market rallies back up and takes out the short as well. So you can see this defined sideways range there. The market became really quiet. Some of these bars are only 2 or 3 points, which is most unusual given the news item that we had. Another one there, another potential sell. The stop was taken out before it was filled. There's another one there as well, which wasn't filled. And then we had a long there where the market traded up to the scalp just into the close. So not a lot in the afternoon to report at all. Very, very tedious afternoon in the DAX there. Should have a quick look overnight, and you'll see the market making its way back up already to the high and the close from yesterday. It needs to hold support at the 200 MA, but don't be surprised from 7 a.m. if we have a rally back up to the high. Okay, that's it for today. Like I say, the focus, let's just have a quick look actually. I didn't look at the news, did I? Just to see what we've got today. Let's just have a look. We've got GDP from the UK at 7 a.m. That's to show an increase. What, after Reeves's budget? Oh, well, I bet it does. I bet it comes out at that as well. Just to calm markets on the old rate rises that we're seeing in the gilts. And then we're over to retail sales, and Philly Fed manufacturing index. Got the weekly claim list as well, but that tends not to be focused too much unless it's an NFP week. Okay, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.